Well, good Tuesday to you. It's August 20th. Running a little bit behind on my video today because, work. But we're looking at it right now, and there's been a little fluctuation in the market today anyway, so it's been up and down. But I wanted to look at the 2-year chart of diesel, and I've drawn some trend lines on here, and we are basically testing the trend line on the bottom side here that's been in place since basically May of 23, and so we're testing that. And if you believe that this trend line is a strong trend line and that we're bound to bounce at some point, I would say this would be a very good time to look at locking in your diesel prices for next spring. So I would seriously look at that. I mean, they're talking about demand being down and demand for gasoline being down and things like that. But I think the Fed is actually talking in Jackson Hole this week, and if they talk about, if the demand's that far down, what's our economy doing? And they should be having their finger on the pulse of that. And I would not be surprised if they don't inkle at some type of a Fed rate cut. The dollar is already going down, I believe, in sympathy to that idea. We're down 40 basis points today, down to 101.35, I believe. So if they do, then I think that could get, if the dollar keeps going down, because if the Fed, does rate cuts, the dollar is going to continue to fall, which should be a positive thing for commodity pricing, depending on how you look at it. But it could cause a bounce here, and especially since we're testing this trend, I just think there's things in place that are going to make that probably go up, even though we're into the fall season here, late fall season. It may not go wild, but I would look for it to pick up. So the next thing I was going to look at was energy futures. They are down just a bit today. Diesel's down ½ cent. Crude oil's down 0.38. So, and then the next thing we can look at here is the spring weight chart, which is still in this basically a wedge here that at some point is going to break. And wheat, it's a commodity, so it should be affected by what the dollar is doing. And if the dollar continues to go down, even though in the wheat, I think the wheat fundamentals are better than soybeans. Obviously, there's a lot of soybeans out there. The Pro Farmer Tour is going on right now, and it'll be interesting to see what they actually come up with. But if the dollar continues to weaken, from what I heard, our soybeans are actually cheaper than the Brazilian soybeans at this point with the dollar dropping, which puts us back into the market. So, and I think it was Russia just bought some from us. So I think it could bode well for a lot of our grain markets. So if that dollar continues to drop. So hang in there, guys. I think that's all I got for you now, so we'll catch you in the future.